There's more than $4,000 a year sitting on the table for Canadians 65 and older in 2026. 9 separate bills you can legally stop paying, and Service Canada will never call to tell you. Stay with me to number 9, because that's the one most people get completely backwards. Number 1. Your prescription bills. If you're 65 or older in Ontario, the Ontario Drug Benefit already covers most of your medications. Under the standard plan, you pay a $100 deductible each year, then up to $6.11 per prescription. That's it. But here's what most seniors miss. If your income is modest, the Seniors Copayment Program wipes out that $100 deductible entirely and drops your copay to just $2 a prescription. The income line to watch is $19,300 for a single senior or $32,300 for a couple. Below that, you're in. Picture Margaret, 72, on 5 regular medications: blood pressure, cholesterol, thyroid, a diuretic, and an inhaler. Paying the standard $6.11 per refill 12 times a year, she was handing the pharmacy over $360. On the copayment program, she pays $2 a fill, about $120 a year, a savings north of $240. The mistake that costs people money? Never applying, because they assume they earn too much and the form isn't worth the trouble. One senior who guessed she was over the limit was actually $4,000 under it. One short application to Service Ontario, and every trip to the pharmacy gets cheaper for the rest of your life. Number 2. Your dental bills, and this one is big. The Canadian Dental Care Plan now covers seniors 65 and up, as long as your adjusted family net income is under $90,000 and you don't have private dental insurance. If your income is under $70,000, the plan covers 100% of the approved fees, no copay at all. Between $70,000 and $80,000, you pay 40%, and between $80,000 and $90,000, you pay 60%. So even higher earners get something back. If you're receiving the Guaranteed Income Supplement, you're almost certainly in the full coverage tier. Cleanings, exams, x-rays, fillings, extractions, even dentures. Covered. Consider Bill 68, who needed a full upper denture quoted at $1,900. Under the plan, his out-of-pocket dropped to $0. His neighbor, earning $75,000, paid 40% on the same work, $760 instead of the full $1,900. The catch people trip on: the coverage is not automatic, and it must be renewed every single year. Miss the renewal window and your card simply stops working at the dentist's desk. The 2026 to 2027 period is open right now. Apply and check your renewal each year when you file your taxes. Number 3. Your property tax. If you own your home, most provinces let seniors defer property tax entirely. In British Columbia, you can defer the full bill at just over 1% interest for lower-income seniors. The amount becomes a quiet lien repaid only when the home is sold. Alberta lets you defer the education portion. Many Ontario municipalities let you defer until the house changes hands. On a $4,000 tax bill, that's $4,000 a year you keep in your pocket now. And at roughly 1%, the yearly carrying cost is about $40 against thousands freed up. Take Doreen in Victoria, 74, on a fixed pension. She deferred a $4,200 bill, kept that cash for groceries and heating, and still owns her home outright. And in Ontario, the senior homeowner's property tax grant pays up to $500 a year on top. The mistake? Seniors fear deferral means losing the house, so they drain their savings paying in full. One couple emptied an $8,000 emergency fund over 2 years rather than defer $1. It doesn't cost you the house. You keep full ownership. The balance is simply settled from the estate later. And quick reminder, keep listening for number 9, the one nearly everyone gets backwards, because it's costing working seniors thousands every single year. Number 4. Public transit. If you receive the Guaranteed Income Supplement, you likely qualify for deeply subsidized transit. In British Columbia, GIS recipients get a full 12 months of unlimited transit for just $45 a year. That's the entire annual pass, not the monthly rate. Most other provinces and cities offer senior passes at a fraction of the standard fare. A regular adult monthly pass in Metro Vancouver runs past $180 for 2 zones. Over a year, that's more than $2,000. So the GIS pass saves a rider close to $1,900. Frank, 70, rode to his medical appointments and the grocery store twice a week, paying cash fare, about $1,100 a year. until a clerk mentioned the $45 pass he'd qualified for the whole time. He'd overpaid roughly $1,000 a year for 3 years running. The typical error is assuming you have to be destitute to qualify. The link is simply your GIS status, which many modest income seniors already have. Ask your local transit authority for their senior or GIS fare and bring proof of your benefit. Number 5. Your bank fees. Almost every major Canadian bank quietly waives or heavily discounts the monthly checking account fee once you turn 60 or 65. That's typically $4 to $11 a month you should never pay again, up to roughly $130 a year for doing nothing but asking. RBC, TD, Scotiabank, BMO, and CIBC all run a senior rebate, usually $4 off the monthly fee, applied only when you request it. Yet banks rarely flip the switch automatically. Harold, 66, paid the $16.95 monthly fee for 4 years after he qualified, nearly $800 gone, simply because no one at the branch told him. When he finally asked, the teller applied the discount in under 5 minutes, and it never came off again. Call your branch or check your account settings online and ask them to switch you to the senior discount. It takes 5 minutes and it's permanent. Number 6. Your sales tax. And this one is changing for the better in 2026. The GST-HST credit already sends low and modest income seniors a tax-free quarterly check, up to $533 a year for a single person, paid out in July, October, January, and April. Starting July 2026, that program becomes the Canada Groceries and Essentials benefit, with the exact same eligibility rules, but amounts 25% higher. That pushes a single senior's payment towards $660 a year, about $130 extra over the old amount, for the same paperwork. The only thing you must do to receive it is file your tax return, even if you had zero income. One senior who stopped filing after her husband passed lost 4 quarterly checks in a row, more than $500, before an accountant caught it and had them reinstated with back pay. Skip filing and the check simply stops. File on time and it arrives automatically. Number 7. Your home renovation costs. If you're 65 or older and you make your home safer to live in, grab bars, a walk-in tub, a ramp, a stair lift. The Federal Home Accessibility Tax Credit lets you claim up to $20,000 in eligible renovations and get 15% back, meaning as much as $3,000 returned at tax time. Many provinces stack their own home accessibility credit on top. British Columbia and others add another 10%. A couple who installed a $4,200 stair lift claimed it and got roughly $630 back federally, plus a provincial slice on top, close to $1,000 combined on one invoice. The mistake retirees make is paying cash and keeping no receipts, then claiming nothing at all. One man spent $11,000 widening doorways and lost $1,600 in credit because he tossed the paperwork. Keep every invoice. Note the work was for accessibility, and hand it to whoever prepares your return. A renovation you needed anyway becomes a renovation the government helps fund. Number 8. Your income tax itself. Once you turn 65, the federal age amount kicks in, a credit built specifically for seniors that directly reduces the tax you owe on top of your regular personal amount. For 2026, the age amount is worth up to about $9,000 of non-refundable credit, which erases well over $1,000 of actual tax for many retirees, and it applies automatically the moment you qualify, provided your net income stays under roughly $45,000. Above that it shrinks, disappearing near $98,000. The error? Seniors on simple pensions often don't file at all, assuming they owe nothing, and in doing so they forfeit this credit and every benefit tied to filing. One widower living on OAS and a small pension skipped 3 years of returns and left more than $3,000 in credits and GST checks unclaimed. When his daughter filed the back years, the refund check covered his property tax twice over. Even with low income, file. That single return is what unlocks the age amount, the GST credit, dental, and GIS all at once. Number 9, and this is the one almost everyone gets backwards. If you're still working past 65 and already collecting your CPP, you are very likely still paying into CPP out of every paycheck, roughly 5.95% of your earnings, matched by your employer when you don't have to. Once you're 65, collecting CPP, and choose to stop, you file one form, the Captain 30 with your employer. And those deductions end the first day of the month after you hand it in. On $30,000 of employment income, that's around $1,785 a year back in your hands. On $40,000, it climbs past $2,300. On $50,000, you're keeping close to $3,000. Take George, 67, still driving part-time and collecting his pension. He filed the Captain 30, stopped the deduction, and kept roughly $2,000 that would otherwise have vanished from his checks. Money he'd been losing quietly for 2 full years before he learned the form existed. Most working seniors never file it because no one tells them the option exists. They simply assume the deduction is mandatory forever. It isn't after 65. That's the bill people keep paying by default, year after year, for no reason at all. So here's your one action step this week. File or update your tax return, because that single document is the key that unlocks the dental plan, the drug coverage, the sales tax check, the age amount, and every provincial benefit on this list. If this helped you, subscribe and share it with someone over 65. The ones who find out in time keep the money, and the ones who don't find out after it's gone